23,000 jobs vanished in July. Gold just posted its biggest move of any major ETF today. Stocks aren't scared, they're pricing a cut. The name I've saved for last, down 41%. Here's what Monday's open could look like. S&P futures up over 0.5%, Nasdaq futures up more than 1%. Hang Seng's higher, the Nikkei's basically flat. Every board on this screen is pricing the same thing, a Fed that blinks in September. The headline number was ugly, 23,000 jobs cut in July. Wall Street read it backwards. Bad news for workers, good news for stocks, because odds of a September hike just collapsed. 23,000. That's how many jobs vanished in July. The number that flipped the entire rate hike narrative overnight in a single Friday session. Now, here's the take everyone's got wrong. The story going around is investors panic buying safety. It isn't. The dollar cracked, the second rate hike odds died. Gold's just the cleanest way to trade a Fed that's about to blink. 2.26%. That's GLD's move today. The biggest single-day jump of any major ETF in the market. Not fear, a rates trade wearing a gold costume. Right, from gold to rockets. 2 weeks ago, this company shed $600 billion on Iran fears. This week, it just priced the biggest IPO of the year. SpaceX priced at $135 a share, $1.77 trillion. Musk keeps ironclad control. Shares are already up 16%, back near that IPO price. Retail can finally buy in directly. $327 billion. That's the swing in SpaceX's value in a single week, from an Iran conflict sell-off to the biggest IPO on record. Nobody launched a new rocket. The story just changed. Time for the weekend deep dive. The story explained properly, the way a smart friend would over coffee. This week it's SpaceX, and the mechanics matter more than the headline. Pricing at $135 sets what insiders and early buyers can sell at. The first lockup expiration just passed. That's supply hitting the market. BlackRock reportedly took a $5 billion stake anyway. That's conviction, not speculation. Meanwhile, a travel app you've actually used just proved the AI trade isn't only chip stocks. Airbnb beat earnings and told Wall Street it's spending more, not less. Brian Chesky told Wall Street straight up, Airbnb's spending a lot more on AI. Beat on earnings, stock up 15%. If the AI trade is spreading to apps people actually use, that's the tell it's not a chipmaker only story. Crypto never sleeps for the weekend. Bitcoin's sitting around 65,000, barely moved. Ether's near 1900, same story. Quiet, which after this week might be the most interesting thing on the board. On the retail boards this week, Celsius holders arguing over a CEO swap, Lululemon bulls betting India triple sales by year end, InnoData traders splitting hairs over MACD signals. Retail's doing its own homework, worth watching, not worth copying blind. Right, the name I've been sitting on. It's down 41% from its high, and the crowd's starting to disagree with the sell-off. It's Netflix, down sharply from its high, and Wall Street split. Some analysts still see it 26% undervalued, even after the new franchise rights shake-up. That disagreement is exactly why it's worth a look. 41.5%. That's Netflix's drawdown from its high, the number that makes this either a value trap or the most overlooked name on the board. On the chart, 75.30's the level to reclaim, 65.08's the floor that's held twice. Lose that floor and the bull case is dead. Hold it and 26% undervalued starts looking real. The crowd gauge agrees more than it disagrees, 78% leaning buy, her direction pointing up. That's not consensus screaming top. That's a name quietly getting bought while nobody's watching. This is the kind of setup where stacking every signal on one chart matters. The crowd gauge, overbought, oversold, both moving averages, all in one view instead of 6 open tabs. So, Monday's open, futures green, gold still catching a rates trade, and Netflix sitting on that $65 floor. Analysis, not advice. Full breakdowns at PremiChart.com and on X. Enjoy the rest of your weekend.